Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial report of Cheche Group, but trust me, it's not as dull as it sounds. Think of it like this. If financial reports were cars, this one might have a few dents under a shiny paint job. Cheche Group is an investment holding company, but really we should be looking at the affiliated entities, which are the actual operating companies doing business. These are the real drivers of revenue and where the action happens. Cheche Group is based in the Cayman Islands, but the interesting parts are in China. To understand Cheche, we need to learn about all the different entities they use, like VIEs, variable interest entities, which are used to work around Chinese regulations on foreign ownership. While it might seem a bit complex, it's how many foreign listed Chinese companies operate. Now let's examine those all-important financial numbers. Because of the recent merger, we're looking at combined numbers from Cheche. So let's try to see if there is some good news here. Starting with the revenue, Cheche managed about $483 million in revenue for 2024. That's a slight increase from the previous year, 2023. That's good, but definitely not the crazy fast growth you'd expect from a tech company. Looking at the expenses for 2024, a key line item, general and administrative, shows about $15 million. It sounds small, but means that roughly 3 cents of every dollar goes to admin stuff. It might not seem like a big deal, but it's something to keep an eye on. And what about profit? In 2024, the company had a loss of about $8.5 million compared to almost $22 million the year before. That's definitely a trend to be optimistic about, even if they are not quite profitable yet. Let's quickly take a peek at the balance sheet. Accounts receivable, money owed to them, nearly doubled to about $126 million. That could be a sign of growing sales, but also a bit of a risk if they can't collect it. Cash is down by more than half, sitting at $17 million, a worrying sign to investors who want to see cash on hand. Alright, let's talk about the scary stuff, risks. Cheche, like many China-based companies, faces significant regulatory and political risks. There is a risk of getting delisted from Nasdaq if the PCAOB can't inspect their accounting firm for 2 years in a row due to political and regulatory issues. This, of course, would not be great for the stock price. As Cheche is operating in a super competitive and fast-changing market, it is not easy to predict where they will be in the next few years. Not only do they need to beat the competition, but they also need to adapt to new laws. Changing rules in China could mean they have to change how they do business, which costs money and reduces profits. Also, it might be hard for them to get the right permits to operate, which would hurt their ability to grow. These VI structures create all sorts of risks, such as not being able to actually control their business like they'd want. If the Chinese government says their VI structure is illegal, they are cooked. And this is always a popular one. The PRC government has control over the conversion of its currency into USD. This could limit them from being able to move money around and ultimately affect the value of your investments. Of course, like any stock, the price can go up and down a lot and you might end up losing money. On a positive note, I do have to mention the increased disclosure about their risk management and cybersecurity, as that's something new that the SEC asked for, and it's a good thing that we are seeing that. All this sums up to roughly $1.25 billion. Cheche Group is trying to expand beyond just car insurance, getting into other types of insurance, but who knows if that will work. This will at least help them diversify their revenue and grow profits. To continue being successful, they'll have to keep up with new technology and changes in the laws. This takes money and focus, which is always difficult. Oh, and before I forget, the company has attested to the fact that they have not restated any prior financials to correct for errors. So what's the verdict on Cheche Group? It's a mixed bag. On the one hand, they're stemming the bleeding. However, they're still losing money and have some serious risks due to how they are set up in China. On the other hand, the stock is really cheap. No, would I invest? I personally would not put my money into this one sum. That's all for today. Don't forget to like, subscribe, and leave a comment.